Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 20th of July 2019 and we're providing our gold and silver weekly update for the week ending the 19th of July. We shall also be commenting on the significant rise in the silver price and assess why it happened and where we believe the future direction of silver lies. Gold rose $10 last week from $1,415 to $1,425, having hit a high of $1,450 and a low of $1,400. In sterling terms, gold finished the week at £1,139. That's up £13. And in euros, it closed at €1,270. That's up €15. Silver rose 98 cents, from $15.22 to $16.20, having hit a high of $16.57 and a low of $15.17. In sterling terms, it closed at £12.96. That's up 85 pence. And in euros, it closed at 14.44 euros. That's up 0.94 euros. The gold to silver ratio fell from 93.3 to 1 to 87 to 1. The Dow Jones closed on Friday at 27,154, down 68 points on the day and down 178 points on the week. And the Nasdaq closed at 8,146, down 60 points on the day and down 98 points on the week. And the S&P 500 closed at 2,976, down 18 points on the day and down 37 points on the week. Brent crude fell $4.25 from $67.72 to $62.47, and US light crude fell $4.58 from $60.21 to $55.63. The dollar index stands at 97.15, that's up 0.34 on the week. Gold prices opened initially weaker, bottomed to $1,400 on Wednesday and then rallied twice, peaking on Friday morning and falling back a little in the afternoon, clearly the result of profit-taking, but after it had reached a 6-year high. Part of the rise was on the back of further dovish comments from Fed officials, including John Williams and Richard Clarida, the latter commenting on the increasing tensions with Iran and recent naval incidents, including the US Navy announcing it had shot down an Iranian drone in the Strait of Hormuz, something we've been warning members about for some time. Also, the dollar index strengthened on the back of a considerable fall in the euro, as investors now believe that it is likely that the European Central Bank will cut rates on the 25th of July. From a technical point of view, the lower closing price of $14.25 suggests a reversal top, leading towards downward momentum. The reality, however, is that we shall have to wait and see whether that reduction continues into Monday, and if it does, then gold will struggle to remain above 1400, and if it doesn't, and we see renewed buying, then it should break through that resistive 1450 level, which may become the floor. What is certainly concerning for us at the moment is Iran, especially since it authorized the seizure of British flag tanker in the Gulf, which was accused by Iran for, quote, violating international maritime rules, unquote. Tensions were further heightened when a second British-owned Liberian-flagged tanker, the MV Mesdar, was also boarded by armed guards, but fortunately was released on Friday. British Foreign Secretary Jeremy Hunt tweeted today, quote, yesterday's action in the Gulf shows worrying signs Iran may be choosing a dangerous path of illegal and destabilizing behavior after Gibraltar's legal detention of oil bound for Syria, unquote. Iran's Foreign Minister Javad Zarif tweeted, quote, that the UK must cease being an accessory to economic terrorism of the United States, unquote. So we have to wait and see how this plays out, but increasing tensions will only prove positive for gold as a go-to safe haven investment, which is why it will be difficult to assess Monday's opening price, as technically it should fall, but geopolitics may indeed provoke the opposite reaction. However, with traders expecting a 0.25% Fed cut on the 31st of July, and some calling for and forecasting a 0.5% cut, this will serve to underpin gold prices. So if anything, we see some price volatility until the Iran and Fed decision outcomes are known. Having covered gold, silver was the real story of last week, and yesterday we produced a video entitled, "Why Did Silver Prices Rise This Week?" We've placed a link in the description below, so if you haven't seen it or heard it, then we do recommend that you do so. But to recap, and perhaps to add some further points, the main reasons silver rose last week are as follows. Analyst Alistair MacLeod made public his interpretation of the COT report, identifying 4 major traders taking excessively long positions in silver, and suggesting that the largest was potentially acting on behalf of the People's Bank of China. Mike Maloney of Gold Silver excited the online marketplace by repeating MacLeod's analysis to his considerable database. The gold to silver relationship corrected from 93 to 1 to 88 to 1 and then closing at 87 to 1. This was long overdue, but no one knows where the current norm now lies. Silver normally follows gold in both upward and downward directions, and when it does, it tends to outperform, and we witnessed this last week. The reasons mentioned above vis-à-vis gold, including comments made by New York Federal Reserve President John Williams, who said that Fed policymakers could not wait for economic disaster to hit before reducing interest rates. Quote, "It's better to take preventative measures than to wait for disaster to unfold. The expectation of lower interest rates in the future lowers yields on bonds and thereby fosters more favorable financial conditions overall. This will allow the stimulus to pick up steam, support economic growth over the medium term, and allow inflation to rise." Unquote. And finally, there has been a continuing trend in Asia, and especially India, to substitute gold purchases for silver. The continuing increase in the gold price, increasing premiums, and government financial restrictions have seen considerable moves in favor of the cheaper silver metal, thereby, of course, adding to the GSR correction theory. Now, apart from a very small dip on Monday morning, silver prices continued to rise all week, peaking on Friday and falling back a little in the afternoon following profit-taking. What we found interesting, speaking to a number of dealers in the United Kingdom, 3 major ones in fact, each of them were reporting an increasing sales of silver to them from customers. Now, we have to admit, even we were expecting the opposite, that is, increases in physical buying by customers, as now at last silver prices were beginning to rise. But perhaps as far as the UK is concerned, there must be some loose hands in the silver space waiting to extricate holdings. We can certainly see in Asia increasing physical purchases of silver, mainly at the cost of gold, and we suspect, though we haven't yet been able to confirm this, similarly in the United States. We are certainly aware of increasing gold purchases by central banks, and of course many commentators believe that where gold goes, silver must go, but further. Added to this, of course, is the view held by the likes of analyst Ted Butler, is that JP Morgan Chase may be trying to corner the silver market in a similar fashion as the Hunt brothers did in 1980. Data from the CME Group shows the investment bank by far holds the largest position in silver, with a total of 153.7 million troy ounces. Butler alleges that JP Morgan has been stockpiling physical silver while undertaking COMEX short selling to keep the prices down. So if true, the announcement of a whale or 4 going long silver last week may indeed be the turning point, thereby pushing silver to uncalled for heights, enabling JP Morgan to liquidate its physical at vast profit. Interesting a conspiracy all of this sounds, and yes, a JP Morgan trader has pleaded guilty to metal price manipulation in the past. We suspect this is just a paper play acknowledging that the gold to silver ratio have got out of kilter and that this has to be corrected. More so with silver rising in price rather than gold falling, bearing in mind the current global economic environment. Now that said, one has to still bear in mind that any silver rise, while the economic world is in recession, will be tempered by reducing industrial demand, with some 56 or 57% of all physical silver demand currently used for industrial purposes. According to International FC Stone analyst Rona O'Connell, weakening global economic growth is undermining the outlook for demand and dragging on prices. Adding to that, huge stockpiles could mean the metal is unlikely to join gold in its all-time highs. So what economic data and influences can we expect to see arise next week? Well, on Tuesday we have the existing home sales for June. Wednesday, market manufacturing and services flash PMIs for July, plus new home sales for June. Thursday, durable good orders for June, and Friday, GDP for quarter 2. So Wednesday and Friday are probably the most important days for economic statistics, and as we stated last week, the greater influence will be the market's assessment as to whether rates are likely to be reduced by 0.25% or 0.5% on the 31st, though our view remains that the former is more likely. A couple of months ago, we were asked by a member what level we believe silver could reach in 2019, both to the upside and the downside. The answer we gave that member then was a low of $14 with a possible, though unlikely, flash low of $13.50 and a high of $17.50, with silver resting closer to the $15.50 mark. Now, the last time silver hit $17.50 was in September 2017, and that year it peaked just above $18.30. Frankly, we do not envisage this year to be much different unless the geopolitical black swans we warn of come into focus or view. Yes, we are now all facing an environment of lower interest rates, which should prove positive for gold and silver. But we have to bear in mind that the reason for those lower rates will be falling global demand, economic demand, and therefore lower silver usage for industrial purposes. We also have to remember that stock markets love low interest rate environments, except the banking sector, of course, and this is an alternative location for investors to place their capital. So whilst we may very well see a short catch-up by silver, and frankly possibly $17 silver next week, or by the end of the month, and perhaps, maybe, a $17.50 peak, we can also envisage pullbacks and silver settling back down again between $15 and $16. That said, if we completely misjudge the Fed and they lower rates dramatically, which we doubt, and either China refuses any deal with the US and the Iran situation worsens further, then certainly this will be a short-term boost for both gold and silver and could temporarily push prices up to $1,600 gold and $20 silver. Now, we all know it won't go above $20 as, according to Harvey, it is at that point all of the banks will collapse. See our video in the description below, the nonsense of Harvey and silver doctors' encouragement. Sorry, couldn't resist that one. Now, in view of the potential worsening Iran situation and the Fed's interest rate announcement due in just 11 days' time, and the ECB's determination on interest rates in 5 days' time, it would be a little irresponsible of us to suggest that gold and silver prices will either definitely go up or down next week. Often we can predict it with some degree of accuracy. However, there are too many variables at play which could affect it in either direction. Our inclination, though, is still some firming of prices until both rate decisions are out of the way. But the one thing we can say with a degree of confidence, and will happily be called out on if wrong, we are almost certainly not going to see $2,000 gold and most certainly not $200 silver this year, As Keith Newmar, President and CEO of First Majestic Silver Corps, is quoted as forecasting on what we regard as one of YouTube's major pumping channels, Silver Doctors, just 5 days ago. Finally, to all Inner Sanctum members, our branded merchandise is now on the website at illuminatisilver.com, and you receive discounts if you are a bronze or silver member. Tomorrow we shall be publishing a premium video in the Inner Sanctum, our third modern monetary theory video, especially as very shortly the world is expected to adopt its principles for the foreseeable future. Also, if you haven't already done so, please sign up to our Discord channel, which is primarily hosted by Bowman and regularly contributed to by controversially Greg and from this week onwards myself, so that matters can be debated and discussed as they arise. All that remains is to wish each of you a most prosperous week ahead and to thank you for listening to this podcast. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.